Okay, we're doing number 6. So for number 6, we're looking at grape. And the question wants us to first of all identify what method is being used here for valuing closing inventory. Well, let's look at it. You start the month, I believe it's the month, with the week or whatever, with 1,615 valued at that. You then buy in another 1,200 for this. So let's just first add and multiply this and just know what the valuation of that is. Just clean all this out of the way. So the 1,200 units you just received at £1.25 is worth 1,500, which means that you now add these together. Of course, the 1,650 and the 1,200 is this 2,850, and that gives you a total cost of 3,480. So if I just wanted to test AVCO quickly, what I'll do is let's find the average first. So that's 3,480 divided by 2,850. And that's the average cost of each of those units, 3,480, 3,480, 3,480 divided by 2,850. And that's £1.22, 1.221. Keep it all in your calculator. Don't round up. Now, if this is the average cost, if I multiply this now by the issues, as in going to the warehouse, that's the 1,300. So do that in your calculator, because that's technically, well, we'll see. I don't know. Let's do it. 1.221. Multiply that by the 1,300, and you get 1,587. So I actually am sure that this is using an AVCO method because I've done it that way. If you were to use a LIFO method, you should test well very quickly. But if this happens, I mean, it doesn't matter. Well, let's say we use a FIFO method, then we know that all of those goods should have come from the first batch, right? If we were using it. So you would have said, well, let me find out what that is. 1,980 divided by 1,650. Let me just find out what the cost per unit is in case it had been coming from a that's £1.20. That won't quite get there. What would it? 1,300 times 1.2 will not get you to this. So it's not FIFO, and you could then argue maybe it is LIFO. So you're saying, well, listen, if it's LIFO, then we know that the 1,200 of these is actually quite a nice one. This should be 1,200 of these would first of all cost 1,500, and then I'll need another 100 from here, and those are at £1.20. So you're really saying 1,500 plus 120, which is 1,620. So that's not that either. So you can disqualify FIFO and LIFO and get to AVCO. So now we know that it's AVCO. Let's complete this story. Let's complete the story. 1.221. 1.221. 1,500. So now I know that I've taken out 1,300. So I have left, of course, the 2,850 minus the 1,300. So I have 1,550 left with a value, of course, 3,480 minus 1,587 with a value of 1,893. Then you go along and issue by a new batch here. So let's multiply that together total. That's 1,200 times 1.302, and that's 1,562. I'll just keep it rounded down. And then what you then do is you say, well, look, let's add them all together. So that's the 1,550 plus the 1,200, and that's 2,750. So you have 2,750, and you have a sum, of course, of 1,893 plus 1,562. Some of those things, right? Because you're adding the values together, that and that. So 1,893 plus 1,562 gives you 3,455. 3,455. So now I have 3,455. I can tell you what the individual cost of those units are. So it must be 3455 divided by 2750. That is the value of a unit, 3455 divided by 2750, and that is 1.25. Excuse me there. 1.2563. I'll just leave these. I'll keep it in your calculator. Don't. Now you can multiply that by, because yes, if you, how did I get this? You're saying, oh yeah, oh, it must be the 3455 divided by the number of units, the total. Fine, the 1.2563 or whatever. Now multiply the whole thing together in terms of your issues. You issue out 1,500. Then you have a total here of 188. I'll round up to 1885, which means you're left, of course, with stock of the 2750 minus the 1,500, which is the 1,250, and the rest of that value as well. So 3455 minus 1885, which is 1,570. So that's that bit. So that's B done. It says here, let's complete the sentence with regards LIFO as a pricing method. The LIFO method for costing issues means that we use the last inventory. The last inventory arriving is what we use first. It always means that the inventory is physically issued on a rotating basis, so that the last inventory in is the first inventory issued. Yes, that's correct, because that's what's happening, isn't it? The last inventory in, if you like, is the first inventory issued. That's what last inventory first out means. Okay, great. So the answer is will. And let me just make that very clear. 1 second. The answer is will. Okay, great stuff. That's question 6. Because I have done question 6, but what I just want to do with question 7 is just show you the just to see ourselves again what's going on. I'm interested in understanding what's happening here, what methodology is being used. Well, let's look at it. Let's just get the let's just use the AVCO. Start with that because we have it right there in front of us. Yes. So I'll just, again, you've received the 1,200. You get this. You buy this in. I could quickly do that again. 800 times £12.15 is 10,000. And of course, that's how we add the 10 to the 14, and that's why we get the 24,400. And let's find that 24,400 divided by the 2,000, and to get the £12.2. So if it was the AVCO method I'm using, I should then find out that 820 times 12.2 gives me the 9840. Let's find out, times 820, and no, it isn't. So I am not using the AVCO method. That's the first point. So the question here is, who are you using? Well, let us see if you were using, well, there's 820 coming out. So let's find out what the opening inventory currently is at, the valuation of that. That's 14,400 divided by 1,200 units, and that's £12, right? Perfect. So there's £12 here, and this is £12.50. So if we're using the first in first out method, what it would mean would be that all of these units would come from here, right? Because there's 1,200 if we're using the first. So let's see, if I multiply 820 by 12, what do I get? 820 by 12, what do I get? I get 9840. So obviously I am using 8 times 12. I'm obviously using the very first in first out method. That's what I'm obviously using. Yes, because it's perfect there. And then you just complete this story. Yes, and let's do that very rapidly. 820. So I now have 2,000 less 820 in stock, which looks like 1,180. Yes, and then of course you find the difference between the values, which is 24,400 minus 9840, and then you have 14,560. Then you go and bring in some new stock of 800, and that increases this, of course, to 1,980, and then, well, sorry, let me do this quickly. 800 times £12.25 is 9,800. Let me do this one as well. 800 times £12.50 is 10,000. Let me just put these in. So that's 9,800. 800 times 12.25 is 9,800. Add all of that together. 9,800 plus 14,560 gives you 24. By the way, it's very possible that I would make a mistake in my adding. I'm very good at that. So given that it says you're now issuing 900 on a first in, first out basis, well, let's be clear. You have issued 820 from the first batch, and from that first batch, you would have 1,200 minus 820 left. You'd have 380 left. So you would have 380 of that 900 from the first batch at £12, wouldn't you? And then you will have the balance of 520 from this batch here that came in at £12.50, right? Because you would get rid of this first, and then of course you had to basically you have 2,000 units comprising of the 1,200 and 800. So that's all coming from this first batch. Nothing from here yet. Nothing from here yet. So now if we add all this together, we know that you will have 380 times 12, which is 4,560. And then you have 520 times £12.50, which is 6,500. So you should have a total of 11060, and therefore 11060, and therefore a cost per ton of £12.28. And then now you can just take that away, take the 900 away. 1,980 minus the 900 leaves you with 1,080. And then, of course, the valuation, of course, is 24360 minus 11,060, and that's 13,300. Yes, let me just quickly check this calculation again here with the 900 times £12.28. Yes, 4,560 plus 6,500. Yes, 11,060. So yeah, and there we have it. And that's question 7. That's question 7. Jeanette, I think the best thing to do from experience, if you're just again building your knowledge here, is to actually test it out. Suppose you will accept that. Imagine you had receipts stock, and let's just start off. Let's just keep them simple with 100 units, and you receive 100 units at £5. So they've come into the warehouse, and there's £500, and then you let go of say 50 of those units. I'll just change my pen color. Right? Because and when I say you let go, you're doing first in, first out. So you issue 50 of those units. So 50 of those units leave your building at 5, and that's 250. Imagine your next issue, right, is your next issue of receipts is for another 100, but this time they are at £10. So you now have £1,000 left. And then you issue out, I don't know, 10 units, something along those lines. 10 units at, you will still be issuing 10 units at £5, right? Because that's the old stock. So it means that the stock that's left, if you like, I think that's what they're really asking here. Yes, that's what they're really asking. Which type of inventory will show the highest profit? I think it's important to pick up on this. So you're issuing this stock out to the warehouse. Now, when you issue this stock out to the warehouse, hopefully you can see here that if I had done, this is first in, first out. If you had done it the other way, or let me finish this way first. So you're doing this. So what you must end up noticing is that you're left with pretty expensive closing stock. I think that's important to highlight. So you've now issued 60 units, but you have closing stock 40 units at £5 and 100 units at £10. I think it's best to just do it this way, because this way you can actually see it yourself practically. It's not like I'm making you guess. So you have closing inventory of 1,200. That's the important thing here. Now, if you had done it last in, first out, right? Let's imagine what would have happened. Imagine imagine I had these two issues first before I then, sorry, I had these two receipts first before I then issued, right? So I had the stock arrive for the 100 units of 5. Then I bought another 100 at £10, and then I decided to start issuing. You probably can see what I'm trying to prove here is that way you would have issued 60 units all from here. You'd have done 60 units all at £10. So you'd have had issues of 600, and you would have had left as closing inventory your 100 units here at £5 and 40 units left at £10. Well, look at the value there. You have 500 here, and you have 400 here, and you have 900. So I think that's the first point to highlight. So because this answers two important questions. With LIFO, which is what's happening here, you have a much lower closing inventory because you are pushing out quite expensive stock. With FIFO, you have quite expensive, or the highest valuation of the closing inventory. That's the point here, because 8 and 9 are very much connected. But now here's the thing. You remember that profit, if you said what's profit, profit is revenue minus cost of sales. Remember, cost of sales is opening inventory plus purchases minus closing inventory. So the higher the closing inventory, the lower the cost of sales, right? Imagine this had been 2,000, and then I'd done some work for 1,000. Well, here, when I take off my closing inventory here, which is pretty high, this means your cost of sales ends up being smaller than if I had closing inventory that was only 900. I'll have a much higher cost of sale. So the point here is, when you have a lower cost of sale, of course you will have, this could be 10,000. This would be 10,000 in both cases. So a lower cost of sale due to a higher closing inventory. Yes, this is recorded so you can take it slow and make sure you're comfortable with the idea. A higher closing inventory, which means a lower cost of sale, gives you a higher profit in the end. And that's sort of your principle, as opposed to a higher cost, a lower closing inventory gives you a lower cost of sale, and therefore you have a higher profit. So that's the point. So we'll probably do these two questions together. But I think conceptually as well, you can sort of see here that if we went back to the accounting equation, I'm just doing a number of ways so you can see what's happening here. Another very interesting way of thinking about this ultimately is that we argue that A is equal to C plus L. Now, if you bought inventory, imagine if you had inventory sitting there at 500, if you started your business with £500 and bought some cash and whatever and ended up having inventory, if you increase the value of your inventory, if it goes up, any stock you have from 500 to 600 or something along those lines, you add another 100. Well, of course, the only way you can match that is to argue that your profit, well, not argue, you've made, if you like, a profit of, it's like a revaluation ultimately, has also gone up by 100. So increasing in inventory with high pricing leads to an increase in profit, because that's the only way we can match. That's what it really means, that you've made this extra profit. So answering these two questions now, in a period of rising prices, what type of inventory shows the highest profitability? Well, it is the FIFO method, because you are leaving behind much more expensive inventory, which leads to higher closing inventory, which leads to lower cost of sales, which leads to higher profits. And again, this is what it's saying here. in times of rising prices, the valuation of first in, first out will lead to, which is exactly what we've just done here, will lead to lower cost of sales and therefore leading to higher profits due to a higher valuation of closing inventory, right? Because that's really the point here. These two are connected. A higher closing inventory gives a lower cost of sales, doesn't it? Okay, and that's question 9. That's question 9 for you. Not too crazy a question. Let's look at what they're asking us here. They're asking us that our friend here issued 70 polls on the 25th of May. So well issued after all these goods had arrived. So using the AVCO method, we are literally adding the number of polls together. So that's 50 plus 80 plus 60. So that's 130 plus 60, that's 190. And adding the total cost together, which, oh, sorry, yes, that's my calculator. So we have here 400 plus 600 plus 420, which is 1,420. So divide that by 190 gives you the average 7.47. Great. So you now have 7.47. So a number of things. If we're talking about the issue, you issued 70 polls, so that's £7.47. Leave that in your calculator. 7.47 times 70 polls leaves you at 523. 523 if you're doing it that way. So I'll just erase that so I have space for the others. Space for the others. Right, and now what we now see with the FIFO method is that we are saying with the FIFO method, the first in, first out. So in terms of the issue, if you're issuing out 70 units, well, the first 50 would have come from the May the 6th. And then we know what the cost per poll is, which is great. So we know that we have 50 units at £8, which is equal to 400. And then, of course, we have 20 units at £7.50, which 20 times £7.50 is 150. So we have a total issue of 550. Yes, you can see that's what I've done over here. And if we're talking about a last and first out, we're talking about 60 units at £7 and then 10 units at £7.50, right? Because the 60 units would have come from here, and then we would have 10 of those units to come from there. It's 420, and then we have here 75. So 420, 5, 9, 495 would be the situation. Right, so let's very quickly look at what the balance is. The question is asking in terms of what's left. The question is asking what's left. So in terms of what is left, if we look at the AVCO, I shouldn't have probably erased that, but you can quickly do that again. I suppose I can just quickly, no, it's not as complicated. I'll just add all that together. It is the same for all of them. Just find the total, 400 plus 600 plus 420 is 1,420. 1,420. So just deduct each of these, minus the 523, gives you 897. That must be the balance here. 1420 minus the 490. That would be the LIFO balance, 930. I don't know why they had to swap these around. Oh, sorry. Let me just do that again. The FIFO balance would be the 1420 minus the 1420 minus the 550, which is 870. And then the LIFO balance will be the 1420 minus the 490, which is 930. Right, that's right. That's in the right box. So those are your answers for that. I'm literally just, this is the total, isn't it? So taking off what we had initially issued, right? These issues, and therefore the closing balance would be the rest. Would be the rest. And finally, B, what we're really saying here is what do we include in inventory? If you remember that in valuing inventory, we are really interested in the manufacturing costs, the costs in the factory. And so, of course, the prime costs, which are direct materials and direct labor, of course, um, would be in it. Of course, the product costs, of course, probably similar way of putting it. Marginal costs are just telling you all the variable costs, which are direct material, direct labor, any variable overheads within the factory, things like that. The period costs, if you like, are fixed costs, if you like, that are external to production, and those will be under your expenses section in your income statement. So you would have here sales less cost of sales, and you'll have your gross profit. Then underneath expenses, you will have your period costs. So these costs are not included in the inventory valuation. That's how we sort of manage that. Okay, great stuff. That brings us to question 10, and that brings us to the sort of worky sort of sections of inventory. We then move on to, in the next video, to the sort of some journal entries. Okay.